Hi, I'm Brett Swartz, founder of Capital Gains Tax Solutions, where we help defer capital gains tax, not using a 1031 exchange, so you can create and preserve more wealth. In this video, we're going to cover cost segregation plus the deferred sales trust to maximize your depreciation write-off. This might be the single most powerful reason to use the deferred sales trust, especially if you're a long-time commercial real estate owner and or have done any accelerated depreciation on any of your deals. So let's first of all talk about the intent of why you own commercial real estate. The first reason, or one of the biggest reasons you might own commercial real estate, has to do with the ability to write off the income by what's called depreciation. So depreciation offsets the income that's coming in on a commercial real estate property so that you don't have to pay more in tax, but keep all of the cash flow. So this is probably if not the number one of the top reasons to own commercial real estate. But what's the problem? Well, the problem is eventually, if you own long enough and have done multiple 1031 exchanges, which you're deferring to 30 to 50% of capital gains tax and depreciation recapture, depending on what state you live in and how much depreciation you've taken over the years. But you go to exchange, and what happens? Well, that schedule follows you. This is a time when you don't want the schedule traveling with you, because that means you don't have as much depreciation on the next deal. So let's walk through an example. Let's just say you owned a $5 million property and you bought it 20 years ago and you're fully depreciated because you've done some accelerated depreciation and you've also done straight line. Well, if you go to buy let's say a $12 million deal tomorrow through a 1031 exchange, you're only going to have an additional $7 million in capital gains tax. Because why? That first $5 million has already been depreciated. Okay, so that's not good. The solution for that is the deferred sales trust, in that you could sell that same $5 million property, put the funds into the trust, and then by partnering with the trust, buy that same $12 million deal, and now you have a $12 million depreciation schedule. Why? Because it's a brand new deal with brand new money, with a brand new LLC in which you're the managing member of, who happens to be partnering with their trust. It is an exit strategy, the deferred sales trust by nature, not a continuity strategy with the 1031 exchanges by nature. So how does this all tie together with accelerated depreciation? Well, accelerated depreciation is just that. You're gonna depreciate certain items in a shorter period of time to get the maximum tax benefit as possible. So the strategy is this: why not buy, let's say, a $12 million property, do accelerated depreciation right away, sell when it makes sense, right? Still add value to the property, sell when the timing's right, but then move the funds back into the trust, buy a new deal, and therefore get even more depreciation ready to go. Now, here a couple caveats here. We got to be careful of the mortgage over basis issue, okay? Because that's a situation where we cannot defer any mortgages above the basis. So we got to be careful about how much debt we're taking on. A couple solutions to that: you can pay down the mortgage to the basis. That's number one. Or or I guess yourself, but number two would be to get a lender to loan on that for some other properties. And or we can do what's called a bifractured 1031 exchange, where we're replacing just the debt from that property in a smaller exchange. We have deals that are ready to go that can offset high debt as long as you're a accredited investor. So, and then the rest of it can go into the deferred sales trust, and you can continue on the strategy. Or just in general, just don't make sure that your basis is above your mortgage. So those are just a few reasons to consider the deferred sales trust, along with cost segregation and the power of depreciation at every single commercial real estate deal you're doing. Oh, by the way, this works for the sale of businesses, professional practices, high-end primary homes, or artwork, as far as the tax deferral and the ability to buy investment real estate or a business. So reach out to us. We'd love the opportunity to teach you more about this, get you comfortable with the structure and the strategy, which is based upon a 23-year track record with thousands of closes of individuals who own commercial real estate, businesses, primary homes, artwork, and collectibles. We look forward to connecting with you. Thank you so much for watching.